protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into Money Unleashed with Chris Hoffman. We appreciate you checking out the podcast. New episodes come your way on Monday and Friday each and every week, so make sure you're subscribed wherever you get your podcasts. And, of course, you can catch Money Unleashed every Sunday on 95.5 WSB in Atlanta. Tune in for 2 great hours of conversations geared toward getting you thinking about your financial present, your financial future, and ways to help you build the retirement you want. That's every Sunday on 95.5 WSB from 11 a.m. to 1 p.m. Now, you may hear us ask for your questions here on Money Unleashed, and you can send us those right over there at unleashyourmoney.com. There's a box that says Ask an Expert. You just type in your question and then give us a chance to address them here on the show. And I've been going over some of these that we get, Chris, and I think not only will they benefit just the person who asked, but listeners at large. And I'm going to call these frequently asked questions. Are you ready for a good fact, Chris?
Yep, let's do it.
All right, frequently asked questions for retirement. Let's lead off with number 1. Is it really a good time to retire if there's market volatility and economic uncertainty? Should I just push through and hope it works out?
So when is there not market volatility and economic uncertainty?
Another good question.
So the markets can't get any stronger and the economy keeps chugging along. I know there's a lot of panic out there and a lot of fear, right? And rightfully so, right? We're concerned. The stock market's gone on a meteoric rise, and there are a lot of things at play politically and in the economic arena that create uncertainty. You know what is not uncertain? Your plan, your financial plan in writing, tracked and managed by a competent fiduciary advisory team. Period. If you're meeting with your financial advisor quarterly, just say, how are we doing? How's it looking? Give you the scorecard, forecast out what we're seeing in the future, and then gives the opportunity for the client to share what's going on in their lives, their needs, their wants, their desires. But there is no perfect time to retire. You can't work 30 plus years and then say, I'll retire when the market is calmer or the economic landscape seems to be more stable. You can manage through it. You can change some of the investment strategies you have. You can hedge some things. So that's the way I would answer that. I would say it's a good time to retire when you're ready and when you've built a plan that you've fully vetted, you've sat on it, thought about it, talked through it with your spouse, talked through it with your financial advisor, and you've all come to the conclusion that, yep, we can generate enough income in retirement in a highly reliable or guaranteed way, and we can still grow our principal. If you can check those 2 boxes, and you got to avoid taxes along the way too, then you should be in good shape for number 1.
Yeah, just important to point out that the market only affects part of your financial story. It is not your entire financial story. But another good question that I get, this is number 2 on the list, is what if stocks tumble right after I retire? I mean, you don't want to see that happen. Nobody wants to think about that happening. So, Chris, what if?
Yeah, the only thing that would prevent you from being able to do is dollar cost average into lower stock prices. So I'm just going to talk in general here. If you have a client that is using their assets to generate income and the stock market falls, that income should not fall. Nobody wants the stock market to tumble, but what are you going to do if it's in your 401k and the stock market tumbles? So you got $1 million 401k. You lose $200,000 of it. How quickly can you make that $200,000 back? You can't. You can't at 60 years old. You're not going to be able to make enough money to replenish what the stock market takes away. So the time to manage through that and prevent it from happening is actually right now. It's not after you retire. It's a year or 2 or possibly 5 before you retire. Now would not be a bad time, folks, to assess your overall risk, because the stock market has gone up straight up over the past 5 years. I know COVID took a little bit of a hit, but obviously it rebounded from that, and it's at all-time highs recently. So the time to do this is now, to rebalance your portfolio. And I'm not saying take all the risk out. I'm saying segment your risk. What money, if it tumbles, according to point number 2 here,
Right.
if this money tumbled, would it have a material impact on your lifestyle, your financial well-being, or your emotional state? If the answer is yes, then we have too much invested in that. If the answer is no, this is for long term, I'm going to hold it for a decade or 2 decades, or possibly hold it and leave it to my husband, my wife, or my kids, then it doesn't matter if it tumbles. You're not dependent on it. You're a beneficiary of the growth, but you're not dependent on it growing to fulfill your lifestyle in retirement.
Now, here's a little insight about what happens when you come in and meet with somebody at Hoffman Financial Group. They're not just going to generate one version of a financial plan. They're going to give you those multiple iterations. So inside that planning process, an advisor can show you the various scenarios for how your portfolio may change and adapt to these things over time. And Chris, that's invaluable as well. So you can understand that COVID correction that we saw, the Great Recession, the dot-com bubble, all these things that we have seen in our lifetimes and more that could come, there is a way to chart a course that can absorb some of these factors.
Yeah, and you just hit on something that I don't think we emphasize when we talk about the full financial plan, which is in the full financial plan. It does have an income section. So this isn't I have fully retired, I have no more income coming in. We can play with, all right, if I retired immediately and I didn't have any income, zero that out. And how do I fare? Okay, if I worked for 2 more years, put 2 years of income in, put in 2 years of a 401k contribution into the plan. Maybe we do a 2-year retirement forecast. Maybe we forecast retiring in 5 years. What does that look like? But folks, you're flying around right now blind. 401ks have blinders on. You don't know how much income you can generate. You don't know what your risk profile looks like. A bunch of you are picking stocks and bonds. Why would you pick bonds during inflationary times when inflation's going up and interest rates are rising? It's just a bad deal. And you got burned in 2023 or 2024 when interest rates spiked. So let your financial advisor manage all of those nuances of the active side of the portfolio. The point I would make is it doesn't matter if the stock market tumbles if you know it won't impact your lifestyle and your standard of living. If that's okay, let it tumble. Over time, historically, it always comes back.
All right, a couple of more of these on this list of questions, frequently asked questions for retirement. What happens if my spouse and I end up with too much togetherness time?
Too much togetherness time for a husband and wife. Okay, that's not unrealistic, I suppose. How about some hobbies? How about the girls do a girls' trip, the guys do a guys' trip, or the guys go golfing or what have you? But you don't need to completely reinvent yourself. At least that's my experience with clients, is you don't become different people. But you do need to fill your time. Mm-hmm. You've been working 8-hour days or 10-hour days, or some of you 12-hour days or longer for a long period of time. So I would say a little bit of planning on the front end, not financial planning, but lifestyle planning is a good conversation to have mapped out when we show you the financial results of the analysis. Then it's for you and your spouse to say, okay, what does our day-to-day retirement life look like? Look, a lot of couples that come in and we're talking about retirement are not on the same page. Either the husband or wife will say, no, I want to work another 2 years. I want to work another 3 years. Sometimes that's because of financial fear, but we're the ones responsible to quell that fear. If it's not a financial fear, the other fear is, I don't know what I'm going to do with myself. Mm-hmm. And that's important to figure out. You don't want to be idle in retirement, and you certainly don't want your spouse to feel too much togetherness.
Just knowing it's a common concern and knowing that it does, in fact, go on for other folks as well can help. But retirement is the gift of time, and that time also needs to be managed. Last one here. Should I feel guilty about spending now on things like travel and fun instead of leaving more money for my kids? I think this is a very interesting question.
The entitlement world of the kids getting all the assets and the money. And, that's a very individualized question. And I'm going to throw this out anecdotally. I would say 50% of our clients say, look, I have done yeoman's work for these kids. I have raised them. I have fed them. I have clothed them. I have put roofs over their heads. I have given them access to automobiles. They have gone on vacations. Some of them went to private school. And about 50% of my clients say, look, I've done everything and more for them than could or should be expected. The other side of it is, how much of a safety net do you give your kids? And this is really a painful thing for all of us. I've got kids in their 20s, and they're naturally struggling to, get to the next economic level and trying to figure out how to buy houses and repair cars and all of that. And sometimes, I've had to say to them, look, you're old enough, you got to figure it out. And that message is received by our kids, and it empowers them. It scares them a little bit, but in your 20s, you can live in a little bit of fear, but it's good for them. So I would say 50% of my clients are saying, if I leave something to my kids, it'll be the house, the cars, the possessions, no liquid money. The other 50%, yes, they may be high net worth. They may not spend a bunch of their money in retirement. They may generate enough income and have growth to satisfy it, and they may leave their principal to their kids. Or they don't need to leave it to their kids. They can leave it to a charity or a church. So very individualized. Whatever your wants and wishes and desires are, I believe we can build a financial plan that satisfies not just you and your spouse's life for the rest of it, but also your legacy planning is important, and we can take care of that too.
You can get started building your plan today at no cost and go from wondering to knowing. Whatever your questions may be, come in, sit down with a financial advisory team like the Hoffman Financial Group and get answers that give you some clarity so that you can move on and enjoy a successful and fun retirement. 404-341-6767 is the phone number, 404-341-6767, or online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.